What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for April 18th, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide weekly updates as well to get you prepared for the day and the week ahead in this glorious market. So today was a very, very choppy day. Nonetheless, we came in just flat for the most part. We did try to sell off at some point today, and then we turned around. The banks got some little bit of pep in their step, and they kind of started pushing the market back up. Now the big thing is big tech and banks in general are just everything other than banks. We're pretty much just holding today, to be honest. We are waiting for essentially the other foot to drop. Coming off of last week and coming into Monday, understand that Charles Schwab had earnings this morning, and they essentially said they weren't doing buybacks today, and they sold off pretty heavily, but then turned around and started pumping, which is interesting nonetheless because we are just starting earnings, and we will get more bank earnings going forward and into the remainder of the week. And that's kind of what we're looking for this week, is to look and see what essentially some weakness in these earnings. And particularly this week, we have a lot of bank earnings, and not just the big banks, but we have a lot of mid-sized banks. Now, we are opening up tomorrow with Bank of America and Goldman Sachs. That's going to be extremely important on how they do. We got a lot of mid-sized banks tomorrow morning as well. After the bank, we got First Bank. So we are just now hitting close as of right now, as I'm speaking right now. But First Bank is Service One Bank. We have a lot of banks just in general reporting after hours. And then going into tomorrow morning, we do have Lockheed as well going into tomorrow, which is a defensive stock. And then after close tomorrow, we have Netflix and we got United. So those are going to be big. And then obviously more banks for the remainder of the week, but along with ASML, Morgan Stanley, and Tesla on Wednesday. Again, this is the critical time in trying to find weakness in banks. It's not just the Big Ten, but we want to kind of start looking outside of the Big Ten and kind of see where everything is at, and really determine what the state of the market is. Now, if there's any kind of negative sentiment in the market after hours, that could be something that is essentially the final straw. Like I've talked about multiple times, we are in the final stage, and at this point, we just need something to break. If we get massive bank failures, and given the fact that commercial loans and especially credit crunch is really what we're looking for. So removal of a lot of credit is going to put a lot of pressure, considering that there's a massive amount. We are at the historical levels for credit in general, and the defaults and delinquencies that we've been getting lately is causing potential credit crunch. And then if that does happen, you're going to squeeze out this last piece that needs to be essentially pulled for this whole thing to kind of cave, and then give us a nice reset to cause massive amounts of disinflation. Because you have to understand, even though last week going over the core, the core is only showing signs of increase because we've taken out an additional year, right? We hardly have made any progress if you hadn't taken out that additional year. But now you got a new, almost a fresh chart that's going to show massive decline. But again, you are pressing still another 25-point basis move going into May, and then potentially still debating on the other 25 in June. So as of right now, we are really trying to determine if this recession, how bad this is going to be. Again, there's still massive layoffs left and right. We'll get more numbers on layoffs as well. I think that's going to be a big thing. But also understand that it is the beginning of the week. Once we start getting further in the week, we're going to get more starting tomorrow to Thursday. You're going to start getting some really, really a lot of data, and you're really looking for recession numbers or layoffs, and forward guidance is really what we're looking at here going into this earnings. and then into next week when we start getting into a lot more earnings with Apple and Google and Microsoft, you're going to see if there's any more layoffs coming in. So again, this is a big week for mid-sized to small-sized banks. We really want to see what's going on with these banks and see if there's any issues there, right? And understand there are tons of banks every day after the bell today, in the first thing in the morning, after the bell tomorrow. Essentially all week we're going to get banks, and so it's going to be an interesting week ahead of us. So as of right now, we are pushing back up. Again, I really don't see this market blowing past the 4,200. We've hit the 4,200 before, or come really close to it here, and then we've pretty much dialed back and been cut off. We are in earnings mode, so typically we do pump in a normal cycle. We had this pump all the way back up, but since we made this pump, we really haven't done much but chop. The market's not willing to put a risk on because the market is realizing what's actually going on, and the things are still really bad. Now we're moving on. You have to understand this whole thing is happened in stages, and now we're in that final stage. We need the recession to happen, right? And then when this recession happens, then you have to price that in. Once that's priced in, then you have true bottom, wherever that is. And then you go from there, right? Then you can recover, because that would cause enough disinflation that we wouldn't have to play this game with the Fed all the time and worrying about core. We get back to a more normal schedule, and then potentially even quantitative easing again next year is a very strong possibility, especially if things get crushed as bad as I'm potentially thinking that they could be, that we would hit quantitative easing again at some point next year. To try to drive demand back into the markets, especially because everything's getting crushed in quantitative easing as of right now. So, and then try to quantitative ease so you can start, because you have to understand when you're fighting inflation, there's two sides of this thing that the Fed have. Either they fight inflation or they essentially promote employment, right? And right now you're fighting inflation. So to do that, you're essentially killing employment. So you would need a cycle to reset this. A hard reset would allow them to quantitative ease next week and start driving demand for people to start coming back to work and stuff like that. And not only that, but you're coming back into an election year, right? And so this is something you need to really understand. This is the way things are set up, right? And this is why things are set up the way they are. And it's funny how the timing on all these things set up. We could get quantitative easing right before the next poll. It's a very strong possibility, and very funny how these things work out. So if we can, the sooner we can get to a point to where everything breaks, we started seeing banks break, going to get a credit crunch. All this stuff is timed out and planned out, in my opinion. Obviously, you're not going to know everything that happens when the Fed and stuff are planning these things out. And not to say, I'm not trying to make this seem like this is not a big deal. This is a huge deal. A lot of people are losing their jobs, but understand this is what happens in markets. You have to be emotionless in a market when you are trying to take advantage of a market. Emotional thought and thinking is what causes you to essentially get wrecked, right? So with that being said, as of right now, the market needs more normalization. It needs to price in a recession. That is not priced in. You've been battling a pivot. Every time we dive, people just assume that was a pivot. That's not what's happening. You need this final stage to play out, normalize everything, then we can move from there. So like I said, we'll see what happens. Again, we have a lot of data on track, and like I've always stated, we know what the end game is. We just don't know how we're going to get there. We don't know that one little piece of information that's going to cause this cascading effect. Understand that yes, there's still going to be a lot more issues moving forward, but as far as economy wise, but as far as the stock market is concerned, you need this final stage to happen and prices to normalize, and then at that point then you could recover. So but this will have lasting effects moving forward from here. So with that being said, we can look at the technicals real quick. Again, we are chopping between here. 4,200 is my top, and as of right now, our current bottom is roughly around the 40.72. It's kind of what we're looking at. Again, if we break that, we got some roadblocks here, but ultimately we're headed down to 3,800. Again, we don't know what piece of information would cause us to sell off like that. The only way you're really going to start pushing up is if you get more clarity. I mean, at this point, with the banks breaking, you need like a solid couple month run in which things are looking fine and dandy, and there's no recession, and there's none of this. Quantitative you're still in a quantitative tightening cycle. Like, that hasn't changed, so we're not going to flip back. Like, that has to stop, right? To understand, you need that hard reset. If you don't have that hard reset, you can't go back up, right? How are you supposed to go back up when quantitative tightening is still occurring, right? So, and then the only reason you're going to get quantitative easing is if things break so bad that inflation comes down, right? And to be able to do that, you break some banks, you break some companies, you're going to get massive disinflation. And at that point, then you're going to get it. It's going to be so bad that you're going to have to inject demand back in by doing quantitative easing again, injecting money back into it right before an election. And nonetheless, you still have the debt ceiling right around the corner as well. So there's always that in dealing with that. That's been a hot mess. It seems like every couple of months they just keep kicking that can down the road. So we'll see what happens there. But that's what we look like for SPX. Bitcoin is finally dropping below 30. It doesn't look like it's going to break this 31 mark. We'll see what happens. Again, anything is possible. But again, I think you're going to start seeing everything normalize and just start selling off again. This grinding, like I was showing on the market, the market is just stuck. It's not doing anything. It needs a bad piece of information. It needs something to break for this thing to start selling off heavily. And people aren't going to put risk on because they know what the end game is going to be, but they're waiting for whatever that thing is to officially break. So we'll have to see there. But Bitcoin, again, I think it's still going to see a new low. I think we'll see one last new low before on everything on crypto and on the equity side of it. We'll see a new low before we see all-time highs again, in my opinion. But again, anything is possible. I could be wrong, but that's just what my gut feeling is telling me. Gold, again, still recession. This is recession gold. Gold doesn't move like this unless you're planning on a recession. It wicked. We'll see if this thing continues to make all-time highs. I think, again, very much a strong possibility moving forward. Now, Tesla's earnings on Wednesday. This is not typical Tesla. Typical Tesla on earnings is this move here, which we saw explosion because it was way oversold, and now it's just chopping. The question is it going to be really good or bad? Or if it's really bad, start selling off and break and go back down at 140. I think earnings are going to be mediocre come on Wednesday, and this thing's going to just push up maybe to 203. And then it's going to be shot back down. And then maybe the timing on everything will send this thing all the way back down to 140. I don't know. Things is just not in a good state. And even as strong as Tesla is, again, they're very innovative. And you have to understand that as well. So even though they're cutting car prices, they've made up for that and just their process in creating cars as well. So, but with that being said, we'll still have to see moving forward and what comes of Tesla on Wednesday. But again, the ranges are getting extremely tight on these. And then we got BA, even though with that massive gap down, is trying to push up, still playing this is all junky range. Like, we need a bigger event. This is no new bull market. It's no new bear market. I mean, it's been a bear market, but we haven't changed to a bull market because you need this final stage to play out. So 220 needs to break. Again, still holding roughly around at 194. We'll watch those levels going into tomorrow. And again, you got JPM selling off today, massive wick back up. It's going to retest at least the 144 here tomorrow. We'll see where it goes from there. Again, this big reason is ultimately just because of the massive deposits because of the bank runs, right? That's why JPM did so well. And understand that they're still very fragile in a lot of things that are going on. But those bank deposits are really what helped. And so, again, we'll see what happens there. Expecting it to still fill that gap at some point. We just have to wait until that happens. Goldman Sachs is coming up tomorrow morning. We'll see how well they do. Again, if any of these bigger Goldman Sachs or anything, which we saw Goldman Sachs talked about over the weekend, not looking good and looking like it could be potentially the worst of all of them. So we'll see what happens tomorrow morning. If that's the case, this thing can really start selling off pretty heavy. So, again, we will see. We'll see what happens there. Bank of America also tomorrow. This thing looks like a potential retest on some of these levels here. We'll see if that's the case tomorrow and see if we start dumping. It needs to break back over roughly the 31 mark, open above the 31 mark and continue up, or else this thing's going to bend over. Again, this is roughly around the number 2 or 3 bank, I believe. And so this might get a lot of deposits as well. But we'll see what happens there. But that is pretty much what I got. I don't want to make this videos too long. I know the weekly update was very insightful, and I'm sure some of the videos this week are probably going to be very long. I'm expecting there's a lot of potential events that can occur from these earnings, and this is why I like earnings, because it gives you a lot of insight into what's actually going on. The question is it going to be the thing that breaks the camel's back that causes this whole thing to sell off? We're gonna have to see. We're gonna get a lot of forward guidance, and then again, we lead into the next 2 weeks after this, where we get Microsoft, Amazon, and Apple, and those are going to give us huge insights. And then once we get after all the big earnings, that might be the flush at that point, because on a normal cycle, the market will start selling off again and rolling over all these ones that have had earnings. And then the market will make a direction after that. It'll normally cools off for like 3 to 4 weeks, and then it kind of chills out, and then it does the same cycle again into the next earnings cycle. So it's essentially how the earnings cycle normally plays out. So with that being said, that's pretty much all I have for today. We wait and we see how we open, and then we go from there. So if you made this far, I appreciate you. Go ahead and drop a like, and until next time, I'll see you guys later.